Hello, Sanikji. Thanks for joining our spaces at such a short notice. Actually, we've not done this since quite long. Me and Money do it mostly. And, the new year and everything. I think the whole of December we have not done anything, but we really wanted to do a productive session. So, thank you for taking out some time from your busy schedule and joining with us here. Um,
Thank you, Rimaji. Thank you, Manigarg, for inviting me. I'm quite happy and privileged to be a part of your group at this point. Thank you.
So yes, Money, over to you. How have you been? How was the New Year celebration? What were you up to?
It's been so crazy. I think the aura I could still feel. I think, but for the market right now, it's in the back foot right now. It's been an action-packed year for the Indian stock market, to be very specific. The rest will definitely hear from Sanik sir about this. But there's always, I feel, a silver lining among the dark clouds, right? For this only, just for the journal overview for the people that have joined with us. So for this particular session, we're gonna talk about these new sectors and the new companies which gonna be shining this year, where we can actually look up to, right? For this, we do have Rima, of course, on the board. I think she's highly proficient, and she's been such a great friend. And we also have Mr. Sanik Ji, the man who needs no introduction, having decades of experience. And I truly believe we, as a young investor, newbie investors, can actually learn a lot from his wisdom tonight. So again, thank you, Rima, for joining and hosting this great space. And also, ladies and gentlemen, we do have a lot more things lined up in this show. So we'll just request you, if you could retweet, if you could post up to all these things which we gonna discuss, we gonna share. We will definitely retweet your tweets. We also have some amazing other speakers also joining with us. I could see right now. We'll hear a lot more expert advices also. So just stay tuned as we get started. Over to you, Rima. Thank you for having me.
Yes, so my charts are almost like everything is in red, but I mean, it's okay. Let's see what the new year brings, and let's hear everybody else's new strategies for the new year. Um, and yeah, like you said, I have not been following much as well because with the year end and everything. Also there are a lot of IPOs coming up, so that's a bit concerning as well. In this environment, a new IPO coming up, and they're also their numbers don't seem to add up. But I'm not an expert. That's just my personal views. Probably SEBI knows better than us to clear them for the IPO. But anyway, so okay, we do have quite a few people joining with us at this point, and hopefully more people will join in shortly. If anybody would like to join us, do send us a request. We'll try to take as many people as possible. um Sainik ji, what do you think? How are the markets looking, and should we be positive, or will the first few months would be a rough ride? What are your views?
Yeah, thank you, Rima. I generally am a teacher more than a trader. I love trading. I do a lot of it for the last 30 years. But at heart, I'm a teacher. So generally, these teachers, when they start, they don't know when to stop. So please be patient with me. I prepared for it when Manigarg asked me. I'm actually sitting in Chennai. Tomorrow is the Chennai Marathon. I'm doing the 10K, and I'm supposed to sleep early. But still, I thought I should honor Gargji's invitation. But okay. Very quickly, I have written down some points. I'll just go through them as quickly as possible. The first thing, which I think we should understand, and I think I'm sorry to say that a lot of people unfortunately have not got it. I was also guilty many years ago, but this time, with God's grace, I've got it. What is it? That is, which market are we in? So, are we in bull market, or are we in a sideways market, or are we in a bear market, or are we in a correction to the bear market? So, various opinions have been thrown about by various people, many more wiser than me, many more experienced than me. And what I'm noticing is that almost everyone is not convinced that this is a bull market. So, as far as I'm concerned, I'm fully convinced that this is a strong bull market. So, there is no question of having any element of doubt. Somebody who talks of it being a bear market rally, all I would like to say is that the definition of a bull market technically is higher highs, higher lows, making 52-week highs and making an all-time high. So if you look at that pattern and look at that information, we have Nifty, Bank Nifty, FMCG, autos, PSCs, PSU banks, various sectors which have made all-time highs, apart from making 52-week highs. So it conclusively proves, technically at least, that it is a strong bull market. Okay, that is point number one. So the question will come is, okay, it's a bull market, but what if we have topped in December? Because December, there was a frenzy. It topped out on the first day, around 10,000, 18,900, somewhere in that region. And then we have had a 1,100 point fall. So all I would like to say is that there is something called the December effect, which I've studied for the last 30 years. What is this December effect? December effect is there is no market, no bull market which has topped out in December. They have topped out in January, February, March, April, wherever, but never in December. So now counter would be, is it, can this be an exception? Can this be the first time which is happening? Now let's examine what else December does. December not only does not the market top out, certainly not a bull market, will never top out in December. A sideways intermediate trend may top out in December, but certainly not a bull market. So if we believe it's a bull market, certainly that 18,900 should get crossed in 2023. That is the positivity. Then what else does December do? December is a month where you get a jhatka. That is, everything will be going smoothly. Suddenly in the third week, you will have a 6%, 7% fall. So this was expected. We had, I think, only a 5% fall. People got panicky on December 23rd. They also got panicky yesterday. But this is par for the course. In fact, if December, the Nifty had gone to as low as 17,600, it would still be a typical December. So it is stopped at 17,800 or 17,774, which is still not 17,600. So even if you get 17,600, there is nothing to panic, because that's a typical December. You just check out what happened in 2020 and what happened in 2021. You'll get the answer. So now, therefore, coming to themes for 2023. Themes for 2023, which is the main topic, is the key drivers. The key drivers are, as far as India is concerned, budget, inflation, interest rates, corporate growth, and the political scenario. Many people don't attach much importance to political scenario. Having been in the market for 3 decades, I know how important this political scenario is. In fact, 2004 bull market was interrupted by the political scenario when the market fell 35%. In a bull market, it fell 35%. In 2003, it started. 2004, January it topped out. And then between January and May, it fell 35%. All because BJP, which was supposed to be winning, the NDA, which was supposed to be winning under Mr. Atal Bihari Vajpayee, lost. So you had many such cases. This is one such instance. Even in a bull market, you can have a 35% drop. This year, in spite of all the bad news, we've only had a 18% drop in the Nifty. So therefore, political scenario is important. But more important is the budget. And before I come to the budget, which is actually what I want to focus on, inflation and interest rates. See, most people today think of inflation going to go up and interest rate, therefore, going to go up. My studies clearly shows, both in India and US, inflation has peaked. And now we are in what we call a disinflation regime. And slowly and steadily, disinflation will get hold of us. And by the second quarter of the calendar year, I expect deflation to stare at our faces, which means US and India will be struggling with 0% inflation, or not zero exactly, say 5% inflation in US. Here we will be talking of something like 4 to 5%, which is a dramatic drop from what people are talking about. If that happens, then the interest rates have got nowhere to go, excepting either to be stable or to go down. India, I'm sure, will be the first country to have interest rates lower, somewhere maybe in the first 6 months. US may not do it because they are not arrogant. I mean, their ego is hurt that they did not do it early to raise interest rates. So they will be late to reduce interest rates. But they'll be forced to pause. That pause will come probably in March, April. So therefore, if you look at the first quarter, I think we'll have a fantastic quarter for a bull run. The conditions are there. Now, how much it will go, where it will go, when it will go, we can just take it point by point, which is now take the budget, which is most important thing for us. Now, budgets, if you see, the last full budget of any government is a time when they throw the kitchen sink at the people, which means they are likely to give as many SOPs as possible to a greater to the greatest segment, to the largest segment of the people. Now, if you look at the constituency of the NDA or the BJP, the constituency is middle class like you and me. I know maybe you are in a upper middle class or rich class, but I'm in a middle class. And there are and the people who are the salaried class, I would say. Now, I think salaried class have not got any benefits in the last 4 years. This is a time for them to throw lots of SOPs. Same thing with capital market. Mrs. Nirmala Sitharaman has mentioned in the parliament that our capital market has been saved because of the retail investor. So having mentioned that, I doubt very much she will do anything to harm the retail investor, which means you can expect positivity, at best neutral, at worst neutral, at best positivity. So I go with that hope that this budget will be, probably it is setting up for a budget to be in the top 10 budgets of the last 32 years. 32 years I've been following budgets. I think when Mrs. Nirmala Sitharaman gets up on February 1st, she will produce a budget which will please all and which will be in the top 10 of the most popular budgets since 1991. Why do I say so? I say so because you see what government has been doing very stealthily is being accumulating the the income of the government has gone up tremendously vis-a-vis what was there, which they projected in the budget last year. Where has it gone up? If you look at it, the recent government's policy which said that free food grains worth 5 kgs per head, which was there, which was 5 plus 5 kgs, now will be only 5 kgs free, which means initially it was only 5 kgs, which people used to pay 3 rupees, 2 rupees and 1 rupee for 3 different grains. But because of COVID, they said we'll give an additional 5 kg, which will be free. Now that 5 kg free, which is a COVID thing, is gone. And the old 5 kg, which was a 3, 2, 1, has now become free. So now that gives the impression that the government is giving free food grains to the 81 crore people. Now that comes to about 1,80,000 crores. Now what cleverly they have done is they've eliminated 5 kgs out of that, right? So it was 3,60,000. From 3,60,000, it has come to only 1,80,000 crores. So straight, and they have also given away that 15,000, 3 to 1. They're now giving it free, which means about 15,000 crore hit they're taking. Now people are saying, okay, they're taking a 15,000 crore hit. Actually, what they've done is 1,80,000 minus 15,000 crores is 1,65,000 crores they have saved. There's a huge saving. And that has not been noticed, but it is visible. Now, Mr. Shekhar Gupta has talked about it in detail. He's the only person I know who has talked about it in detail about the saving. The second saving is the windfall tax. Now, windfall tax has been continuously being put, even though the oil prices are down. The Goldman Sachs has estimated that 80,000 crore will come as an extra income to the government. Now, whether it's 80,000 crores or it's 50,000 crores, it is substantial amount will come through windfall tax. Then look at the oil bill reduction. When the oil was trading at 125 to 130, government increased the petrol prices to 107, 108, 110, somewhere in that region. Oil has fallen to sub 80. Government has not reduced. So you can look at the savings which the government is getting through this, the overall oil bill reduction. Oil, 87% of our oil is being imported. And today we have Russia giving us at a discounted price. That amount of saving, I don't have the numbers, but it's going to be huge. And then you look at the miscellaneous cuts in expenditure which they have done. Like the senior citizens, we used to get some 50% discount in travel. Now that's removed. That comes to about 10,000 crores approximately per year. So that is 10,000 crores saving for the government. So now having done all this, they have huge amount of money, and recent numbers which have come from, the GDP numbers, they will get another 90,000 crores. They can increase spending and still be in the fiscal deficit of 6.4, which they have projected in the budget estimates of 2022-23. So you have 90,000 there, you have 1,65,000 plus 80,000 plus oil bill reduction. We don't know how large it is, plus some 10,000 crores here, there, and all that. It adds up a huge amount of money available with the government. For the first time ever, the government is having surplus, because not only is this saving, but also corporate taxes are at record, income tax are at record, GST is at a record. So you go into the budget with so much money at your disposal, plus you go into a budget where BJP is in the heat, whether you like it or not. Politically, they are very smart. Any government, for that matter, will try to see that they will give softs to everybody so that they come back in a big majority next year. And we have the Karnataka elections, which are due. So all the more important for the BJP to do something in this budget. So therefore, I am completely. I mean, I am very bullish on the budget plus. Now, so where will the government spend? Government has clearly said that they'll spend on infrastructure, example, railways, housing for all, basically, power sectors. So basically, they are looking for road, power, anything to do with infrastructure is where the money is there to be made. What I have labeled it as Atmanirbhar stocks. The stocks, which are sectors which are dedicated to India and not export oriented, not like, for instance, IT or chemicals or pharma, some of the export pharma. Export oriented companies, export oriented stocks are unlikely to outbeat the market, whereas these which are there will outbeat the market. So there is no doubt at all that this 3 months will be very good. Now, rest of the year, in my opinion, will be much more difficult than 2022 because, you see, I expect deflation in US, high inflation in UK. UK may have serious political problems at the end of the year. So I think Europe is in trouble. China and India will shine. But US, I don't know which way it will go. But US will be forced to stop interest rate hikes. That I'm fairly certain. So we are having a fantastic scenario where we should be positive. I am fully invested. I have given a list of those 20 stocks, what I call the Atmanirbhar stocks, which are there in my portfolio. I put it on my timeline. And I look forward till February 1st with hope and with expectations based purely on data. And let us see thereafter. Thank you.
Right,
Thank you.
absolutely.
Yeah,
Yeah,
Mani.
Rima, please go ahead.
Go ahead. I was coming to.
Yes. So, sir, you talked about that India is heading towards deflation, right? And I could see that global turmoil situation still on horizon, and the U.S. and Chinese inflation data are still not out. So, I just wish to ask: do we, as investors, need to take bold bets right now, or be cautiously optimistic as of now?
Yeah, see, Garji, the thing is, the smart money, you follow the smart money. The smart money has been very clear. If you look at last year, for instance, the smart money had already entered the Bank Nifty, the FMCG, and the auto index in March. The market for that sectors had bottomed out in March when the Ukraine war had just started. Nifty bottomed out only in June. Many stocks bottomed out in June. The IT sector bottomed out in September. So where is the smart money going? The smart money is sitting in financials. The smart money is sitting in select pharma sectors. Smart money is heavily sitting in, apart from financials, which are PSUs, more in PSUs than in the private sector banks. So already the smart money has bought into and the prices of them have gone. So I don't see any reason for us to be cautious at this point of time. See, I'm not asking you to be reckless. But what I'm saying is, now, if you say I will be cautious, I'll wait till the budget. Just go back and see what happened in 2021 pre-budget. For the 10 days going into budget, everybody was very cautious and the market had fallen down. For the last 10 days, including on the budget day, Nifty opened in the negative. This is 2021 I'm talking of. And see what happened. All she did was that she did not announce any new taxes. And what happened after the next 15 days? Between February 1st and February 16th, the Nifty and Bank Nifty took off more than 15%, I think so. I don't have the numbers here, but from memory, I can tell you, if you look at the chart, you will see that kind of thing. So if a similar kind of thing happens, actually, there is a very good possibility that will happen because there is money now and there's a need. The need is to win an election. That time there was no need for anything. There was all around uncertainty and fear because there was COVID. COVID second wave was just about to start. So in such a case, the question will be, if I'll wait till budget, no problem. But what if the budget is good? Because the conditions are there for it to be a great budget. If it is so, it will not give you a chance for you to buy. Because what will happen is the prices will go up so much after the budget, which is what happened in 2021. You don't know where to buy. So now there is fear. Now all the experts are saying this is a bear market. or a sideways market. In such a case, when there is fear, one should buy. They say, no, you must buy when there is blood on the streets. The blood is there on the streets, including mine and your blood. So now we'll have to say, okay, what is the possibility of the budget being good or bad? I've given you data. There is no way, in my opinion, that they will give up this opportunity when they got so much money and when they have got so much at stake in winning the next year election, that they will give you a lousy budget. If the budget is good, which I expect it to be, or maybe great, which is also a possibility, then where will you buy? That is the problem.
Absolutely, Sanity. Totally agree with the data pointers you talked about. So you talked about and you mentioned about some of the sectors like FMCG where the smart money is moving, right? Some selected pharma stocks also. So I just wanted to know, is this about the taking bets where the smart money is moving, or where we also need to look upon and do our analysis on top of that while purchasing any particular stock for that matter? So I just wanted to know from your point of view what data pointers you look up to while choosing the best stock in terms of where the smart money is moving.
Yeah, I mentioned smart money. It moved in March of 2022. That is one level of smart money is moved in and got in and maybe got out partially. Now the smart money in the last 2 months has moved to PSUs and PSEs, public sector enterprises, PSUs and infrastructure, and maybe a little bit of pharma. But right now, if you say the smart money after Deepavali has moved into infrastructure, which includes the PSUs and PSEs, and to some extent defense stocks. So this is where the money has moved in. See, when you are talking of how do you get into a stock, you see, you just have to analyze what the government is doing. What is the government's policies? I'll give you an example. In 2008, when it was the last budget of the UPA one, the bear market had started in January of that year. You see, people were still bullish because they had not seen a significant bear market for about 2 years. 2006 we saw, but 2003 to 2008 was a good bull market overall, but there were a lot of shocks in between. But in 2008, I remember distinctly, I'm a Rotarian, so I was the president of a club, and we have this Rotary conference where Manishankar Iyer was the chief guest. He came and said, this budget, the government has to help the farmers. So straight away, we knew that they will waive off the loans of the farmers, because that was the clamor at that time. People wanted loans of farmers to be waived. And people didn't believe it. They didn't believe it, so they kept on buying. So the budget day, they waived off farmers' loans and the market crashed and crashed and crashed. That's it. The day of budget, the previous day of budget, whatever the index was there, it never saw till more than 18 months. Today, you see what they're doing. Today, more and more, if you look at Mr. Vaishnav, who is the Minister of Railways, he's talking of having many 250 Vande Bharat trains. And the Prime Minister is talking of infrastructure across the country in terms of not only defense. People are talking of defense outlay being increased. Look at what the policymakers are saying. That is where the smart money looks at. So you look at what the government of India is focusing on this budget. That will give you a clear-cut indication as to what you have to do research on. So based on that, I have done research apart from corporate honchos, what they are talking about. Let's say PSU banks. If you look at what the PSU bank chairman are saying is, we will eat up NBFCs for lunch. That is why you're seeing NBFCs not performing. And they will not perform because the PSU banks have become tigers. They were previously like mouse. Now they are saying, we will teach you a lesson. So you want fintech, we'll give you fintech. They so aggressive, the PSU bank chairman, when people say, oh my God, PSU bank's prices have already gone up. In my opinion, this is only the beginning. Nobody would like to buy a stock when it has gone up 100% from what we saw recently. And PSUs are the worst in terms of, perception. Because for 2010 to 2022, 12 years, PSU banks have only eaten away your profits. It has killed you. Canara Bank was 810 in 2010. Today we're still at 330. People have lost money. People who bought at 810, nowhere near that. You take any of the banks, PSU bank, they're in. People who bought PSU banks in the last cycle, which was in 2008-9 to 2010, the banks are at 1/3 to half price even now after they've doubled. So now if you look at that, then you'll feel like buying a Canara Bank at 320. But if you say, what was it 2 months ago? It was 197 or 200. I can't buy it at 320. Now you have to understand and look at the perspective. So people say Canara Bank. Sorry, I'm just giving an example of Canara Bank. It is not a recommendation. None of them are my recommendation. If I own something, I'll tell you that I own that. I don't own Canara Bank at this point of time. I give an example. Or you take PNB. PNB will say, if you will say that I own PNB, for instance, at 56. Why should it go at 56? It was available at 30 rupees. This one, but 30 rupees was when it was not doing well. Now it is doing very well, and they have got a long runway. So you have to look at what first the government says and government does, which is what they're saying is I'm going to defense, I'm going to railways, I'm going to infrastructure, and then I'm going to power sector reforms. Then you come back to, okay, which are the good stocks in that? Look at the financials. Then finally you get into technicals for you to do an entry. So that is how I look at it. So I have focused. I said I will eliminate stocks which are not Atmanirbhar. So there were a lot of non-Atmanirbhar, like an IT or even metals. Some of the metals are exporting. Autos. I don't have any autos in my list because autos like Maruti or Bajaj Auto or Tata Motors, they are all having exports. So I don't want to go there. I have limited money. I'm going into BHEL, BEL, REC, PFC, ONGC, GAIL, these kind of stocks, which are public sector enterprises. You look at PSC, the graph, you forget everything, just look at only that. And you will see that they are now hitting almost like it is hitting a resistance and staying there. On budget day, I think it will break that resistance. This is my perception. And I'm very fully convinced. When you are convinced, you put your money. I put my entire money into Atmanirbhar stocks.
Great, thank you for answering that, Sanixi. And yeah, over to you, Rima.
So I was asking to Sainik ji, what all you're saying makes absolute sense. But what I'm saying is that since IT stocks, do give good returns, so like when should we, or according to you, when should we be looking forward to not Atmanirbhar stocks as well? Because since at some times during some cycles they do give us a lot of good returns. So when can we, I mean, I know it's a lot of geopolitics involved. It does not depend on our economy alone. It depends on US and UK economy too somewhat. But when should we look forward to that? And after this, I think if anybody else wants to speak, they can as well. So that is what I'm asking to you. If you can, um,
Yeah.
get-
That's a very good question. It's a very good point. When can I enter IT stocks? Let me give you an example. Between 98 and 2000, IT stocks were the darlings. Anything you touch in IT stocks, you always made money. If people made 20 times, 30 times between 98 and 2000, the dot-com boom. After the crash, yet people held on to IT stocks thinking, okay, they gave me fantastic returns there, so I will keep on averaging. Come to 2003. In April of 2003, Mr. Narayan Murthy one day came and said, we are doing well, but not as well as what we were doing previously. We'll still do well and give good profits. Infosys fell 44% in 2 days, 44%. Just all Mr. Narayan Murthy had to do was saying, we will do well, but not as well as what we did last year. That is, they were not saying that profit will become loss or something like that. They just said times are tough in 2003. That particular day, 9th and 10th of April, if you go and see, you will see across the board IT stocks fell 40, 50%. So I don't want to take a risk. I'm not saying IT stocks will fall 40 and 50%. But all I can see is that the IT sector, the head honchos are still not coming out and giving a profit warning. The only one company which is, in my opinion, a very honest company is HCL Tech, which gave a profit warning. But the market sold off that stock, but not enough. So when you have limited money, we do not know, for instance, whether FIs will come and buy in big numbers. When we don't know that, and when we have limited money, and when you have a government policy which says, I'm going to put all government money in Atmanirbhar companies. Make in India is going to be my focus. Why would I take a chance and buy an Infosys or TCS? Great companies. But what is my return on investment? A 10% or a 15% there, whereas it could be 40% here. So I am making a choice. I love Infosys, I love TCS, but I love BHEL more. I love BEL more. That is the only choice I'm making. It is not to say that Infosys and TCS will fall down or crash or something like that. but they're unlikely to be market outperformers. At best, they're likely to be market performers. If I want to buy into IT, I will buy only after January. When after the budget, I will look at buying IT. Even if IT goes up in the month of January, I will be able to get IT at a reasonable price, I feel, in February. But if I'm going to buy now, I should have some reason to buy. Whereas I have some reason to buy a BHEL or a BEL or a REC or a NTPC, which I don't have in case of IT stocks. So that is why I don't want to get into IT right now.
Perfect. That makes a lot of sense. Um. Hey Vibin. Hi. How are you doing? Would you like to contribute?
Hey Rima. Sir, I think there's a lot of feedback because your mic is on.
Just go out and come because I think there is some problem. I'll just go out and come.
No, sir, you can just mute it and it'll go away.
No, I'm not able to mute it.
Okay.
Oh, I think it's solved now.
Perfect.
Yes. Go ahead, Vibin.
Hey Rima, I'm doing good. Hey Mani, how are you, man? Long time.
All great. Long time, Vibin.
I know.
How was your New Year, bro?
Pretty good. So I think like Rima, Mani, and I, we are the OGs of Clubhouse. we built like big clubs there, scaling more than 100K. But coming back to the topic, thank you, Sainik sir, for all your thoughts. The question that I had is because like so much of it is dependent on the Fed and what happens in the US. I heard you say that Fed will cut rates, but for that to happen, something has to break, right? So, what do you think would break first, and why do you have the conviction that the Fed will cut interest rates probably later this year? And when is the timeline that you're looking at? Like, if you have to give a wild prediction, when do you think they will cut rates?
Yeah, thanks, Vibinji. It's a very, very relevant point which you have raised. Generally, it is accepted that Fed will panic only when something breaks. So everybody is speculating as to what will break. My point is slightly different. I'm saying it may be that in the past Fed has let's say stalled or reduced interest rates when something was about to break, but that is not accurate always. In 2018, Fed was raising rates. They panicked when there was what we call the Volgamedon. That volatility went up like anything end of December 2018, and they panicked. So they stopped QT. Incidentally, they were doing QT at that time as well as raising interest rates. So they panicked without anything breaking actually. Only in the market volatility they panicked. See, you must understand the psychology of the Fed. All the central bankers have got only one motive in life: to enrich themselves and the wealthy people. That's a very cynical statement to make, but I make it based on facts. So they're very happy to reduce interest rates or stall. Now, today what has happened is their credibility is at stake. They have goofed up when inflation is going up. They have not raised interest rate, which I don't want to boast, but I pointed this out in 2021 that Fed will have to pay a heavy price, more than Fed paying a heavy price, we will pay. So we have paid that price. Now I'm looking at deflation. First, I'm seeing disinflation. See, inflation is going up. Now inflation has started reducing slowly. And what is Fed looking at? Fed is looking at two things. One is inflation. The other one is the unemployment. So yesterday's unemployment numbers are very interestingly poised for the Fed. Now, Fed will look at it and say unemployment is a lagging indicator. Now that unemployment which is going to come in the following months, which is February, March, April, will show a significant drop because the layoffs have just started from December. So it will get reflected somewhere in in February, March, April, because you see they will not get other jobs. The guys who have been laid off will not get. And then you will also see inflation is slowly started coming down. If I'm telling you only about US inflation. And what happens is this inflation, like when it rises, it was rising very slowly in 21, suddenly it rose. Now, the same thing is happening in the other direction. That is, it's slowly coming down and suddenly it will fall. The reason why it will fall is all the lagging indicators are, still showing some sign of strength. that is housing you take, or used car sales. If you take current used car sales, which I track on a regular basis, it is collapsed. It's completely collapsed. It's, I think, 4% of the CPI in US. So this will come into focus maybe 3 months later. So what will happen is, from lowering of inflation, you get into disinflation, then deflation will stare at you somewhere in the second quarter, which is I'm expecting by June. Right now, they are on an ego trip, which is, I want to show who I am. I will increase interest rates, come what may. A time will come when you will see deflationary trends sitting at your doorstep, and you will also see unemployment increasing beyond their own, what shall I say, their own expectations, which I am saying will happen, say, by the second quarter, that is April, May, June, sometime by June. At that point of time, any credible, if you want to retain credibility, what you will do is, you will reduce interest rates. Now, whether Fed reduce interest rates, I don't know, but I think they will be forced to reduce interest rates, or their credibility will go bust by the end of the year. So whether they reduce or not is depending on the ego, because they are unaccountable to the general public. So if they're raising interest rates, nobody has lost the job. You see, they have made a goof up last year, they have not lost their job. This year, they will make a goof up. I am fairly certain about it, because I follow the major indicators. The indicators of US are clearly saying, if you look at, lumber, for instance, very good indicator for housing. Housing is collapsed. Then you take, I told you, used car sales collapsed. Now gasoline prices have collapsed, but people are not able to afford cars, or able to afford new houses. At one level, they are able to afford, but most of the Americans, middle America as we call it, is not able to afford. This you will get into focus 3 to 6 months later. So I'll be surprised if they don't reduce interest rates. If they don't reduce interest rates by the third quarter, in the second quarter, you'll have deflation staring at your face. The third quarter, that is July, August, September, if they don't do it, their credibility will be at stake. That may create the roller coaster market. That is why I'm saying 2023 will not be so easy to predict like 2022. I made a prediction of 2022. So I made some 10, 12 predictions. By and large, they come correct, because my mind was clear. In 2023, I have a problem with the ego of the central bankers. I know where the numbers are likely to go, but I don't know where the ego will go. So if they do something which is against natural trend, then you will see a roller coaster. And especially in Europe, you will see huge problems which will come, I think, by end of this. That's why I believe that by Christmas, you may see a new prime minister in UK, or you may see fresh elections. So this year will be very, very tough. In my experience, this is one of the toughest years to make a prediction. See, all of us can make some prediction, but you should have some data, or some, you should have some credible scenario. Personally, I make predictions every year. By and large, they're okay. Not that I make money off the prediction, but I'm saying by and large, my thinking is okay. This year, I want to take it month by month, because I know where the inflation is going, where, the interest rate should go. But whether they will go there will depend wholly on the Fed's ego being, if they bury their ego, they have to reduce interest rates by in the third quarter.
Sir, one of my friends just messaged me, just listening to you speak. He also just messaged me saying, 2024 November is the US election. And he's saying generally the government forces Fed to cut rates so that the market is up and booming before the elections. Would you also agree with that? He's asking that question.
See, I'm not very sure on that. If you take, in 2008 was the elections for the presidential elections when Obama got elected. But you see, 2008, the market was crushed, completely crushed. So if the government or the Fed, see, most people think the Fed controls the market. It is the other way around. The market controls the Fed. Fed only follows what the market does. The market can blackmail the Fed. The Fed cannot blackmail the market. This is a fact. But unfortunately, we have a myth which says the Fed is the person. Markets have to look at the Fed. Markets will not look at the Fed. The Fed will have to look at the markets. You look at Fed, speaker after speaker is talking of interest rates. We will bring it to 5. From 4.25, we will take it to 5. Then what is the 10-year yield doing? What is the 10-year yield doing? Why is the 10-year yield coming down? When you are having a high interest rate scenario, why should the 10-year yield come down? So when you are seeing that kind of a thing, Sorry, I just lost my thought. Somebody came. So you look at what the market is doing. The market is telling the Fed, I don't care. You cannot raise interest rates beyond a point. Fed, the market should have gone, the 10-year yield should have gone to 4.25 because the Fed rate is 4.25. At least it should have gone to 4. And they're saying that they'll increase it next meeting and the following meeting. They're saying it'll be 5 will be the terminal rate. If 5 is the terminal rate, why is the US 10-year yield come down yesterday? It should not, by logic. Market always leads the Fed. Fed is only like a poodle. It's like a dog. The master is the market, not the Fed, which most people think it is, but reality it is not. Statistics are proving. I just gave you an example.
Great. I really hope that answers your question well, Vipin. And thank you, Sanik ji, for detailing it out. Next in line, I could see Aditya with us. Hi, Aditya. How are you? And you can also put up your question to Mr. Sanik ji.
Sure. Thanks so much, Mani. So actually, I didn't have a question per se, but this was a very interesting topic because you were discussing new sectors, right? So I thought I'll share my thoughts, but maybe I can wait for a discussion. Maybe I can wait for some time to hear the discussion because I don't really have a context, right? So maybe I'll share my thoughts later if that's fine.
Yeah, definitely, Aditya. And
Sure.
Rima, if you're back, please.
Yeah, I'm here. I was listening. So okay, I think Sanik ji has given us his thoughts and like his overall views on the market. So let's just like get into an interactive session now. If anybody has to ask anything or even to add anything, because it's very knowledgeable to listen to everyone else as well. So if anybody has anything to add, please go ahead. Aditya, you said you need some time, so let us just come back to you after one person. And also in the meanwhile, if you can please retweet this tweet this session so that more people can join in and we have a better session with more people, more thoughts. Okay, we
We
have
have.
Surana.
I just had one question, Rima.
Rimaji, just one.
Yes,
I
yes.
will log off at 9:30. I'd request because tomorrow I have to get up early morning at 4 o'clock, if you don't mind. So 15 minutes more, I'll take this one. Garji had mentioned that, and somebody has come also. So I need to talk to that guy, and then So if I'll be here for another 15 minutes if you don't mind. Whatever I have to say, I've already said, but I'll answer any questions if necessary. Thank you, and sorry for moving on so quickly.
So
No,
we
it's
truly understand. Yeah, Rima.
no, it is actually I know we requested you to be here on a very short notice, so we are grateful that you could at least join in for however time it may be, so that's not a problem at all. Okay, so since we have Sainik ji for such a short amount of time, if anybody has anything to ask, please go ahead first, and then we'll take generalized thoughts later. So, Ravindra ji, if you
Okay.
had anything to ask, please.
Yeah. Scenic sir was talking about job cuts in coming quarters and other things. So obviously this might have a cascading effect on Indian side as well. So what's your view on retail and B2C kind of segment? When I talk about them, I would imply looking at stocks like DMart, Trent, and also quick service restaurants. So, how are these space looking up this year, and what should be my view to invest or trade on them? When should I look into making an entry, and when I should be cautious to exit the same? Thank you, sir.
Ravindraji, I'm sorry about these QSTs and the platform stocks. I have a very dim view on it since a very long time. I don't think they will create wealth for an investor, and I think it has been proven. I still believe that all these platform stocks and the QSTs are highly overpriced as of now. It is fashionable. A lot of people have bought into, a lot of funds have bought into. CNBC talks of these every single day. But if you want to make money in the market, you need to be where the smart money is. I don't think the smart money is there in any of these QSTs and these platform stocks. I at least don't want to go there. See, at the end of the day, money is limited. Today, we don't have FII money. We only have limited amount of money which is coming from the domestic institutions. Now, that money will necessarily go into growth sectors. Now, that is where one should be looking at. What we saw was the growth of all these was in 2021 when the money was available hugely because the global central bankers poured in money. This year, I don't think it will happen. For instance, I don't think ECB will pour in money this year because I think inflation will be high there. I don't think Fed will pour any extra money for the next 6 months. So why would I want to take a chance when I know liquidity is going to be neutral to negative overall? Globally, it will be. Only Indian liquidity will be somewhat positive, and the positive will go to only certain sectors. So I am not even focusing there. Like the Arjuna focusing on the eye of the fish, for me, Atmanirbhar is the place to be, and I don't want to take chances. It's quite possible. It's quite possible that some big money may come and there could be volatility, operators may come, all that kind of thing, market people may come, but I don't think that it will be long-lived. It will be short-lived. I don't want to take a chance. This is not 2021. 2023 is very different. We have to take lessons from 2022.
All right. Thank you, sir. So just to clarify, I was looking at the QSR. I got your view, but the other sector, what I was looking at the retail, meaning DMart and something like Trent. So you were talking about platform. You are meaning Zomato, right, Sanik sir?
Sorry, I mentioned I meant Zomato and all the others, the Nykas of the world. Okay, on the Trent and DMart. See, Reliance has come into the market. They will eat everyone for lunch, like how PSBs are eating the NBFCs for lunch. I think while Mr. Damani is extremely sharp and he knows what he's doing, I feel it's like IRCTC. 2 years ago, it was a no-brainer to buy into IRCTC. IRCTC is monopoly, everything going good, but you see, IRCTC has not performed. One can say, okay, government put in some, the FPO, and that's how the shares got increased into the market, floating stock. So therefore, it is not doing. But that is not the reason. The floating stock might have increased, but the earnings per share and the valuation was high in IRCTC. I think it is high in all these stocks, including Trent. I feel they are fashionable stocks, what I call their BAP stocks that buy at any price. I am very clear that BAP will not survive. When I say sorry, not survive, I will say BAP will underperform the market this year. I don't want to touch growth. I want to touch value. And BAP is not value. Trent is not value. Trent is growth. So is DMart. Take any company, any stock which is above 50 PE. I think these stocks will underperform. Any stock, including your Bajaj Finances of the world. They were very good companies last year. Bajaj Finance, for instance, the Bajaj Twins have never given a negative year for many years. But this year they have given. And I won't be surprised if they continue it for 2023 also, even though they're very good companies. Good company, bad price.
Great insight, sir. Sir, you gave a good insight there on P number. Yesterday, I was sitting on my portfolio looking at where should I accumulate, add, or average. So yeah, this insight will definitely help me to filter out certain stocks. Thank you so much, sir. Apart from the initial question, what you answered.
Thanks, Ravindra. I hope you make good money this time. I wish.
Thank you so much.
Great, Ravinder. Thank you for joining with us. Next in line, I could see Mr. Ashwini ji with us. Over to you, Ashwini ji.
Hi, good evening, everyone. How are you? Am I audible?
Yes, sir, you are perfectly audible. Please go ahead.
Yeah, I was, facing some sort of technical glitch, time and again. I was not able to listen to, what Sanik ji was telling us. I hope, I'm able to put my question across clearly. So this is actually, an experience that I want to share with you. A few years ago, something like 5.5 years ago, when, pharma was completely out of flavor, I started doing SIP in a pharma-focused mutual fund. And, for example, if I get an NAV of 140 rupees the first month, I never saw that price for next 1 year. It kept going down and down and down, and ultimately reached something like 122. But once it started paying back, it has become one of the most rewarding mutual fund investment that I've ever made in my life. So I am getting a feeling that, if I do something like this with like a longer horizon of 4 or 5 years with, IT or digital, focused mutual funds, I should be able to generate similar kind of returns. I understand that they may not perform immediately, but they may take a while. But I'm prepared for that mentally. So I wanted to take Stanik G's opinion on the same, that while digital or IT sector is down 40-50% from their peak, is it the time to start it as a contra bet, and with a 4 or 5 years kind of horizon? Do you think this is going to be a wise move?
Ashwini sir, I'm really happy that you chose the right sector at that point of time, and pharma played out very well. I think that was, I would say, almost visionary on your part to have selected that. That was a contra bet, real contra bet. Now coming to IT, I'm not very sure about it being a contra bet. Most people talk about IT; it has fallen from highs. They are good companies, so why can't I buy it as a contra bet? But there are companies, I'll give an example. My favorite company is ITC. ITC is a great company, make profits all the time since inception. In 2013, the Nifty was 5,300, ITC was 260. In 2021, Nifty was 18,600, 3.5 times. ITC was still 230. So great companies sometimes go in a limbo.
Yes,
We
sir.
have had
Yes, sir. I'm
tech
with you, sir.
yeah, we have got tech, for instance, going into a limbo between 2000 to 2014, something like that. 14 years, it did nothing. So I am a little bit scared when I have money which is limited, and when I have opportunities which are available in plenty. Why would I want to get into some old horses right now? Old horse also will fly, but they may not fly for 3 years. What will we do at that point of time? If you look at valuations, for instance, today IT valuations are higher than what they were pre-COVID in terms of the PE ratios today, even after this fall. So when I know that information, why would I want to take it as a contra bet? A contra bet today, if you ask me, is pharma. What was your favorite one at that time? Contra bet is pharma. It is not IT. I would splurge onto pharma because today pharma is equally hated as much as IT is hated. If you go back in your own experience, you will know when you bought it, it was hated. And that gave you a fantastic return. I will not be surprised if it gets a repeat in pharma and not in IT.
Thank you. Thank you so much, sir, for your insight. Thank you so much.
I really hope that answers your question well, Ashwini, and even that was my question that I have written. So next in line, I could see Navroop ji with us. Hi Navroop ji, kaise ho aap? And
Uh,
hope you are having a great new year.
yeah, thank you so much. Happy New Year, everyone. Uh, I'll just add to what Sainik sir said, and I'll call since it's about New Year's and new sector. I wrote a thread few days back, and I'll just extrapolate on that. See, if you have to see the new sector, if you look at, let's say, till 2024, like next one and a half year, my bet would be strictly on infrastructure, stocks, capital goods, because the coming budget is going to be totally on infrastructure. Because if you look at the historical past, whenever India has gone into election, the government has increased the public spending because they have to, like garner more rural employment, generate more rural wages, and for that, infrastructure is the best way the government can generate it. So not only the public sector enterprises, but even the private players, the construction of highways, railways, bridges, all these, like ports, everything. So you will see a lot of splurge coming, but this is technically the last full budget before we go into the elections. The second, which I say, is BFSI sector, which is banking, finance, and insurance. Now, in this banking sector, I see not every bank in private, not every bank is going to perform, but mostly the banking sector balance sheets have been totally deleveraged. The NPAs have virtually been taken up. However, as Enixa said, the NBFCs will not perform well. If you read, there was a crisis report in June of 2022, which said that almost 18,000 crore of loan, I don't know what some value, is going to be re-rated in the next year after the interest rates have risen. So there will be a lot of provisioning which NBFC will need to do. So the NBFC stock, some of them recently, as we saw, would see a sharper correction because because unlike the banks, their balance sheets are yet to, they might bloat or they will need a cleanup. So the pain in NBFC stocks could be a bit longer compared to banks which have been totally deleveraged. And PSU banks have done so far much better than the private players. Private player bank are yet to, the big ones are yet to catch up. Some of them are going in the regulatory mergers, so we might see a huge rally coming in them at certain point of time. Then the other thing which I like is insurance sector. The government is planning to bring up IRDA Amendment Act in budget. Most likely they have floated. I will not name the stocks, but they say they want to give a standard unified licenses to life insurance companies in dealing with other general insurance, health insurance, and how much capital can private equity funds can invest. That ratio is also going to be diluted. So you will see a lot of boost in coming in BFSI sector, infrastructure, domestic, as I say, domestic consumption. Now, domestic consumption would mean staples, the FMCG sector. See, ultimately, if the oil prices are going to down, inflation is going to cool off. Ultimately, the benefits will be passed on to the consumers. If not now, maybe 3 months, a quarter or two later. So the FMCG company will be the first ones to pick up the benefit of this. Then, then the other thing which I would, now this is a short-term story. Obviously, defense sector is there because that is one sector which is Atmanirbhar team, and I also have a lot of investments in PSEs for that record. I'm not going to name the companies, but just saying. For a long-term fundamental bet, now this was still, let's say, 2023 near-term market, play. For a long-term bet, like I pick up stocks for 2030 and beyond. I like it. If I want to buy something, I want to keep it for a long. And where do I see the opportunity in those? I'm just going to name the sector, not the stocks. Pharma. In pharma, you will have to be very selective. It will be healthcare, most likely hospitals, stocks. Diagnostics, I don't think they have had a very good run in COVID. Post-COVID, there's a lot of competition emerging in diagnostics, so I do not see that diagnostics with a rally hoga. Hospitals, because there's a lot of health infrastructure which needs to be built up. Penetration is still very low in rural India specifically. Then I see API and CDMO sector, which is the active ingredients which we need. Because Indian pharma, see, textiles you can outsource to Bangladesh. Maybe even mobile phones you can give it to Vietnam. But every country in the world does not have that kind of pharma company like what India has to develop active pharma ingredients. And if the supply chains have to be diversified, what the Quad statement was during the COVID, so then India will. See, I'm not saying that China will totally shut it down and the whole business will come to India. Even if 10% of the supply chain shift to India, that will be a huge amount of volume for Indian pharma companies. In pharma, you have a lot of sector. You have healthcare sector, you have diagnostic sector, you have API CDMO sector, and then you have the generic pharma sector. I avoid generic pharma because of US FDA का वहाँ पे उस पे import का notice आ गया तो गया तो वहीं पे खत्म. API CDMO is niche specific. तो pharma में मेरा जो focus है वो API CDMO में है. Then there is one thing about chemical sector. Chemical sector valuations are way off the roof of late. They had a mini rally and then certain valuations went off the roof. The prices are insane. So you will see a correction in the chemical sector. But in chemical sector also there's a difficulty. How do you define? See, fluorination, fluorochemistry is the most difficult chemistry to implement. It's very, very difficult to control, fluorochemistry. And the supply chain, there are very few players who dominate fluorochemistry in India, right? You have commodity chemicals. Unfortunately, many of those commodity chemicals are also, sold as specialty chemicals. But commodity chemicals, like it's more dependent on coke का price कैसा है, coal का price कैसा है, soda ash का price कैसा है, caustic soda का price कैसा है. But fluorochemistry is something new, where it is applied into paints, it is applied into pharma. For fluorochemistry used for solvents, it is used for so many fluoropolymers. So fluorochemistry is very high margin. Like, and the growth is actually there. So there also, but because of inflation and raw material pricing, there was a certain kind of correction which is going on in the chemical sector. So in a quarter down the lane, probably by May, June, July, or probably by April, May, the chemical sector will be ripe for the picking. And if systematically added, this can be a very good bet for 2030, right? Similarly for pharma, API, and CDMO. The third sector which I am looking for is for 2030 and plus is the green hydrogen, the renewable energy sector. And there, because hydrogen technology, I don't know about the EV technology because there's a lot of lithium waste and a lot of battery stuff going on. But green hydrogen technology can certainly revolutionize the whole concept. And there are players in India who are already doing blue hydrogen in refineries. So I don't need to name the place. You can Google them up, right? So we just need to take it. And if India becomes a hydrogen hub, green hydrogen hub, as the government has envisioned and the policy was released, electrolyzer, there are certain companies who are implementing it now. So it is time, because if you become a green hydrogen hub by 2030, you invest now, you can reap a lot of benefits. So chemical, limited, you have to see stock specific, fluorochemistry, pharma, API, and probably healthcare. Renewable energy, mainly green hydrogen. I find solar energy also is combined. Wind, I don't know. I'm not that big a fan of. Then your short term, it is BFSI and capital infrastructure. Of course, when China is opening up, there will be a short rally spurt in metals, but obviously China has its own metals, so I don't know, metal supplies, and also Europe is still not fully opened up. I mean, they're going to face a recession, so metal might remain a laggard. IT, again, one trend I forgot to add. One trend for 2030 is ER&D, that is engineering research. Lot of IT stocks, specifically mid cap and ER&D sector, have corrected, and they are going to further correct as we will see a hit on their margin in the coming quarter, because ER&D is discretionary. Like, I don't need to name the sector. One is services sector in IT, the other services part, which are the giants. So the other is ER&D sector. ER&D sector has a long runway up till 2030, because more automation, more autonomous driving, you will have more robotics, more nanotics, all these technology driven. Because see, when you have to comply with the ESG norm, the companies would want to digitize and transform into into digital space and reduce the human interface and also carbon footprint. So this really plays up in that space. That's my take.
Thank you, Navroop ji. I think you have mentioned very broad sectors and even pointed out in very much depth about what we need to look as an investors, the journal pointers, the fundamental analysis I could talk about, right? I think in a very brief way you talked about for some of the sectors. Truly appreciate the pointers. Rest, I think Mr. Saniji with us needs to run a 10K marathon. He's in Chennai. I think thank you so much for patiently listening to us, Sanikji. And before that, I just want to switch over the mic back to Rima, and then we'll hear the final thoughts from Sanikji.
Thank you, Sanik for joining us on such a short notice. And you also have engagements tomorrow. So, thank you for giving us your time. Before going, if you want to take a minute or two, please go ahead. And also, a quick plug in that a lot of people have requested to speak. We cannot take all of you at the moment because, the space tends to crash. So, we'll take a couple, like two, three speakers, and then, like the older speakers can go down and we'll take the new ones again. So we'll have to do like that. And Navroopji, thank you for dropping in. Those were pretty great insights as well. Like, I was listening to it, and that was really fun. I think we can continue this if you are free for like more half an hour or something.
Yes,
So
I have time. Not an issue. I'm here.
perfect then. Okay, then Sanikji, thank you so much for joining in. If you'd like to take a minute or two, please go ahead. And yes,
Thank you, Rimaji. Thank you, Garuji. Navroop, as usual, explained brilliantly. So I'm sure all of us benefited by that. Very quickly, all I will say is this, that there has been, a fear psychosis among many investors since April, May of last year, and people have lost opportunities. Because generally the feeling is whenever the market rises, people will come out with so-called excuses where Fed will do that, inflation is here, China will do that, Ukraine war is there. See, finally, we should look at what the fundamentals of our economy are doing. Most important. See, we have seen in the past that FIIs have sold the highest number last year, and yet the Nifty on a point-to-point basis about 4% up. Now, even after FIS selling a record 278,000 crores of shares, we are still having a positivity of 4%. So just look at that. Don't look at just what is happening in the US or Fed or something like that. That is there. In spite of all that, somebody has bought. Who is that somebody? That somebody is the smart money. So the more and more FIs are selling, the more and more somebody is buying. And when I say smart money, it is not the mutual funds alone. See, we look at data of mutual funds and FIIs. If you see, there is a third force, as I keep on emphasizing. What is this third force? That is the smart money, which is your PMS, data not available, day-to-day data not available. Alternate investment funds, where minimum investment is 1 crore, data not available. Then you have people like Junjunwala who are putting money every day, data not available. Then you have corporate treasuries where data is not available. Then you have high net worth individuals, other high net worth individuals which are putting money every day, data not available. Then you have small cases. Lots of people are going through what we call the do-it-yourself investors, data not available. So you have money of great magnitude. In fact, AIFs and PMS are growing at a fantastic pace vis-a-vis what mutual funds are doing. So when we look at data, I think we are seeing only a part of the data and making assumptions that, okay, FIs have sold, so we have to be careful. FIs are selling, so we have to also sell. But if you look at what has happened last year, if FIs have sold 278,000 crores and FIs always led the market till 2021, for the last 1994 is when Morgan Stanley came, and 2021, that is about nearly 28 years, FIs ruled India. Now the tide has turned. That we have to accept. We can't say that FIs are selling, so we will sell with them. We have seen so many days where both domestic institutions and FIs have sold, yet the market has gone up. Why? Because there is a set of people who are willing to take chances, saying that there is some value in the fundamentals of this country. So please do not get afraid. Do not be misled by only superficial data which talks of only FII and DI. That is point number one. Many, unfortunately, have missed this opportunity between May and now. I believe strongly that we are in a very strong bull market, somewhat similar to 2003 to 2007. I believe this bull market has started in 2020 at 7,500 Nifty. Typically, bull markets end at 28 PE. 28 PE is when normally bull markets get into trouble. In 2021, in October, the PE was 28. Today at 18.6, which it was some time ago, the PE was 22. That is, the index was the same level, but the PE is down from 28 to 22. Why? Because 21, 22, corporate sector regarding the Nifty, or the stocks in the Nifty, performed in such a manner, they grew their earnings per share by 27%, which is one of the highest ever. In a year where there was so much of uncertainty, right from beginning of the year, you had so much of uncertainty, so much of fear, so much of selling, yet the corporate sector, the Nifty 50 stocks grew at 27% in terms of earnings per share. That is why 18.6 of today is not 18.6 of 2021. So when we reach 18.6, we always get afraid, oh my God, last year at 2021, 18.6 we didn't sell because we thought it would 20,000, 21,000, 22,000. Those numbers were mentioned there. So now let us not go there. Let us talk of 15,000, 12,000, 7,500. These are the numbers which are being talked in reverse. This is the time, actually, the market is cheaper than what it was in 2021. That is data. It is staring at us. When in a bad year, the Nifty EPS grows by 27%, in a reasonably good year, what do you think will happen? That is why I believe strongly, I may look foolish on February 1st. I think there will be a FOMO rally, which is be panic buying after the budget. This is my thinking. I am planning for that. Of course, I have always kept stop losses. I keep, for instance, different stocks, different stop losses. I feel you should do it. I'm not recommending anything, but I have bought shares which I've mentioned here. And I have no hesitation in mentioning because what I buy, I can mention. There is no harm in that. And I hold all those 20 shares which I put as Atmanirbhar stocks. Now, we also should know that there are some unknown fears which may come. We don't know at this point of time. I told you political uncertainty is a very big issue which nobody considers. I consider it because it has happened in the past that if you neglect political uncertainty, then you will lose money in the market. It happened to me in 2004. So let that not happen to you, to anybody for that matter. Please keep a positive frame of mind. Whenever anybody puts forward a point of view, please question it, including mine. Where is the data? Where is the data that your budget is likely to be good? I gave you the data. Where is the data that budget is likely to be bad? Show me the data. Where is the data which says FII selling will bring down the market? It has not done that. Where is the data which you say that we are overvalued? How are we overvalued? We are undervalued vis-a-vis what were in October 2020. But every day on TV, Indian markets overvalued. Vis-a-vis what? Vis-a-vis China. But China was undervalued even in 2021. We have to compare apples with apples, oranges with oranges. We should compare Indian market with Indian markets at 18,600 or 18,000 or 70,800. We are sitting at 21, 22 P. Typically, strong bull markets peak out at 28 P. I am not giving a target, but I'll be surprised. I'll be surprised if the bull market has peaked out at 21 P. No bull market in history of India has peaked out at 21 P. 28 P is probably 26 P is when we should get afraid. Today we're at 22 P. I don't think we should get afraid. And this is a trailing 12-month P. So every quarter, the earnings per share will only increase. At least that is what is happening. Because in bad times, it is increased. In good times or moderate times, it should increase at least 10% or 15%, may not be 27%. Keep that in perspective. After all, it's your money. You have to think about it. And, you can't depend on what I say or what somebody in CNBC says or what anybody else says. Please question. Please question. Please don't take anybody as an expert in this on data. See, we can all go wrong with whatever we think something may go wrong. But on data, we should always question. I am confident of my data. I presented it here. And I wish all of you a very happy new year once again and a great year, Reema-ji and Garg-ji. We will do one more spaces on February 1st week. And kindly, I would like to join. Whether you invite me or not, I will join if you hold it. And I will be a listener at least, if not a speaker. And let us analyze the aftermath of the budget at that point of time. Thank you for giving me that opportunity, Garg-ji. Thank you for giving me that opportunity, Reema-ji. And thank you for all of you who have spent so much of time on a Saturday night listening to me. I hope you make enormous amount of money in 2023. It will be tough, but tough doesn't mean you can't make money. And I'm sure you'll make with the guidance of Reema-ji and Garg-ji. Thank you very much.
Sir, it's always been pleasure having you. I think the last session we had, it was an epic show, and we were getting a lot more back channel messages that we need to have Mr. Sanikji again with us. I do know that we used to host sessions on Clubhouse, me, Reema, and Vibin, and you were also being there very honestly. I think you articulated today pointers very well. I really hope the people that have joined with us have gathered a lot more knowledge, and I was just noting some of the pointers that you have talked in this particular forum, and that was highly motivating seeing such some people out there who've been very supportive. I think you've been one of them, Sanji, and would love to have on February first week. So thank you again, and I really hope you have a great marathon.
Thank you, sir. Thank you, Reema-ji. Let me leave. Good night once again. Thank you once again, sir.
Over to you, Reema.
Okay, so I hope you're there as well. So anyway, okay, let's move on. Navroopji, thank you for joining in. Although we did hear from you, a brief overview of your outlook on the market at the moment. If you would like to take 2 more minutes to go through it, what you are feeling now or what you're sensing now about the market, you can go ahead. And after that, Aditya, I know you've raised your hand up. After that, I'll just come to you. No problem.
Yeah,
Okay?
yeah. See, I'll add my 2 cents of next few months gyroscoping because I'm a geopolitical expert, written few books on it. So, and I keenly observe the geopolitical statement, conflicts, and wars. So I know what exactly is going to play out. See, next few months, what I see till at least February, till March, April, till April, May, are going to be the first half is going to be a bit volatile because what we have got is that we have got a I heard somewhere yesterday that Fed is going to hike 25 basis point, 25 basis point, and 20. So three hikes are already priced in. So it could be the middle of next year before before a Fed, I won't say cut down the rates, but pause. Because as cynics are elucidated, that the inflation data, it's the indicators are lagging indicators. So those lagging indicators will start to show a trend of disinflation. So when disinflation starts to go and ultimately demand destruction happens, unemployment number starts to rise, the Fed will be forced to pause. I'm not saying, we're going to be what we call a pivot, right? So they may not go from QT to QE, but they might pause. And that pause is when, and that is a period, the next 3-4 months, I guess, because you'll have, like on 1st of February, you have the budget. Same day, you have FOMC meeting. So you can expect a lot of volatility in the coming sessions. A volatility people usually connote with a bearish sense and a negative sense. I don't see volatility as a negative sense. I see this coming 3, 4, 5 months of volatility as a perfect buying opportunity and systematically adding stocks and sectors which I see are going to be the front runner or are a decadal story. 2030. See, we all are here in stock market to earn money, and it's as simple as that. And so my sense is I'm going to invest in sunrise sector which are going to give me multi-bagger returns, hopefully by 2030 and 2030 and plus. So my portfolio, I won't name the stock. My portfolio is built upon a few of the index stocks, and then the themes which I think are going to play out in 2013 plus, and of course themes. Like I still remember, I won't name the fund manager, a very famous fund manager who's show on social media also, who's very accumulate of compounding theories. He says defense is a very good sector, but I don't. I remember till May this year there was virtually no talk, virtually very less talk about defense as a sector. Like why are we not investing? Because I said defense is one thing which is least impacted by recessions. Or rather, America, if you see, whenever it goes into a recession, its war machine starts to go faster and faster, so that it can come out even better. Immediately, we are also having a troubled neighborhood, right, on both sides. So we are also going for indigenization of defense, from drone to missiles to aircraft carriers to naval frigates to even developing Tejas MK2 and probably AMC in future. There are companies which have order pipeline till 2028, 2029. Yes, they may be PSUs, but look at the cash flows. Look at the order book. Their order book is 3 times the revenue of what they make in 12 months. And their order books are filled till 2028, 2030. Why won't, and their PE, one of those companies' PE, is half of what is to be for a defense company. And yet people say, like these are perfect buying, and May, June, July, they were still available at reasonable valuations. So I would still say, like say, defense is one sector which is going, which is a multi-decadal story. It's not only a decade story. Obviously, the inherent risk of a PSU corporation, because unfortunately in India, the defense is totally run by the government, mostly run by the government, and now the private sector has started to collaborate. But and private sector listed companies are very far and few in defense, and they are not big ones. Big ones are mainly the government ones. Even in the government ones, people who had invested 1 year back have made 100% returns. Appears to start giving you 100% returns virtually in defense, and it has still not fulfilled its orders. It is going to start delivering orders to the Indian Navy or Indian Air Force probably in next year, or maybe next to next year. So imagine the order pipeline. Similar story is for API and CDMO. Like people now, no one wants to touch pharma companies. Of course, because margins have been hit. There's an inventory glut. Generic pharma, I never subscribe to. I am personally don't go for it because US FDA import notifications can really screw up badly. But active pharmaceutical industry, I have taken a bet on a company which is probably at a very low EP compared to peers, but has a better runway. So my is I always buy into pessimism, and I always say next 6 months of volatility before things stabilize. The first recovery which you will see, first green shoots which you will see by the middle of this year, by the second quarter or the last quarter of this year, will be the FMCG companies and the rural demand picking up, because after the budget, the impetus on the rural economy grows because the government has to face the electorate. So you focus your portfolio should be mix of the BFSI and infrastructure capital goods for short term, and long term API, CDMO, chemical specific chemical companies, and probably ER&D companies in IT. But again, IT, I would say go slow. Do not invest at one go. Systematically wait for valuations to correct a quarter or two more, and then go for it. Like IT will be ripe for picking by the middle of this year. It will be dirt cheap. Similarly, some chemicals valuations are still high, so maybe again they will be cheap. Even pharma. So by the middle of this year, three sectors will be ripe for pickings: IT, pharma, and chemicals. And these are decadal stories. IT has always delivered, and if people say that, obviously the returns may not be there, it may not come so fast. But I would prefer mid-cap IT where there are ER&D companies, because they are the ones who are going to drive the next IT revolutions. So that's my opinion.
Okay, perfect. So, interesting views, Navroop ji, and I was just going through your profile. Okay, anyway, okay, Aditya, go ahead. I know you've been waiting a really long time. Go ahead now, take your time.
Sure. So thanks, Rima. And I think very nice thoughts, Navroopji. It's always a pleasure to listen to you. I've been in some of your spaces before as well. So I think I also and I am a fundamental investor, a pure microcap investor. So that is in my portfolio, all companies are less than 500 crores of market cap. I really believe a lot in these decadal mega trends, right? Sectors which will grow really fast, and sectors for long term value creation. I agree with a lot of Navroopji's views as well, and earlier Sanikji's views as well. That I'm really bullish on India myself. I think Indian economy is doing fairly well as compared to other economies in the world, growing at 6-7% real GDP growth, whereas other parts of the world are struggling. So I think we are in definitely a bull market, and TV channels do show that we are in bear markets, but I think we are in a very strong bull market in my view. I think in terms of these decadal or multi-decadal bull sectors, right? We have to consider sectors which will grow much faster than the 6 to 7% Indian economy growth rate, right? And defense, completely agree. I think defense is one of those sectors. I believe that with the whole Atmanirbhar focus and with the whole in-housing of our defense equipments, right? I think defense will grow really fast. I have some stats as well. Our industry size is 1 lakh crore, The exports would be roughly around 16-17,000 crore. And we had set ourselves a target of around 1.75 lakh crore in 2025. So from 1 lakh to 1.75 lakh in 2-3 years, that's a high growth rate. So defense definitely is a multi-decadal trend. It would continue for the next 10 years for sure, and maybe even longer. Some other sectors which I feel are really interesting, right? Because their CAGRs will be much higher than the Indian economy CAGR of 6 to 7%. I think one is electric vehicle and green hydrogen powered vehicles. So EV penetration in India is currently around 1% or less than 1%, and that is expected to grow to 30 to 40% by 2030. So if you take 1% to 30 to 40%, right, you would see a CAGR of 40% in the sector itself. So this sector will have a very, very high CAGR. And I think right now a lot of people are circumspect that battery costs are high, but business innovation always takes over, and battery costs would come down, and eventually there'll be a lot of financial sense to purchase electric vehicles. So from 1% to 40%, that's like really high CAGR, 40% sectoral CAGR itself. And therefore, if the sector itself is growing by 30%, and there's a market leader in that sector, and they may actually even grow faster than the sector, so that story will be like a really, really big story. And I personally feel that, like Tesla emerged in the US market, right? There would be some company in India which will emerge as the Indian Tesla in electric vehicles. So I think we definitely should catch that. And similarly, electric vehicle batteries, right? All all electric vehicle components. So some things which don't exist right now but will exist in the future in electric vehicles, batteries, ho gaya, or electric vehicle specific components. I think those will be a decadal mega trend for sure. Second thing would be solar power and electrification. I think right now 60% power generation in India is done through fossil fuels. So 60 is the power ministry number. This number will eventually go down to 10 to 20%, and we will be spending. Will be a lot of our energy will come from renewable sources. The government is also planning to spend 2.4 lakh crore to achieve the 500 gigawatt in a green energy target. So solar energy and electrification sector definitely a decadal mega trend. And with the RDSS scheme, right? RDSS is revamped distribution sector scheme, where the government is focusing on loss reduction and ensuring that the power supply is given to consumers through a financially sustainable and operationally efficient distribution sector. I think that's another sector which is in the electrification space, right? So that would grow. Smart meters, you would see smart meters coming in all across India. So companies in RDSS, companies in the electrification sector, transmission, distribution, smart metering, I think all those will grow as well. So next, I would say railways and infra. Really bullish on railways and infra as well. Even in the short run, like Navroopji said, I think our budget will have a lot for infra to boost the rural demand, and infra is the best way to do it. So railways and railways also government is spending quite a lot, right? The gross budgetary support for railways is expected to increase from 1.4 lakh crore to 1.8 lakh crore in the upcoming budget. So railways again budgetary support is expected to increase, and railway electrification is a big theme. Solar projects in railways is a big theme. Bullet trains in railways. So railways definitely an infra. I count them as one sector sort of, because both are part of overall national infra. Next one, consumption sector. India has a pretty low per capita income right now. That's only going to increase, and with the increase in per capita income, the consumption sector will increase. Within consumption, I personally like artificial jewelry sector with the aspiring middle class. We see companies like Melora, right? Melora is an unlisted company, but companies in the artificial jewelry sector, apparel sector, electronics retail, other fashion retail, though that aspiring middle class will definitely consume more, and that would be a big sector as well. Um, I think then AI, the new age tech, AI, ML, cloud, cyber security, data analytics. So that's another interesting sector which I personally like, because the sector itself will grow at a really fast pace. Then next one, sustainability and recycling. Right now, we are generating a lot of waste products, right? Companies which actually take those waste products and convert them into useful products again. So that again would be a big one. Recycling of metals, recycling of electronics, recycling of e-waste, other materials. So we are seeing companies in recycling rubber, right, tire waste and all. So as mankind produces more and more waste, companies which take that waste and put that back into economy, I think they will do well. Next one is 5G. Right now, 5G is nil in India. No 5G coverage in India at all. So that sector will grow at a really fast pace as well. 5G penetration is zero today, should go to 80% in the next few years. And the last one would be semiconductors. Vedanta, Foxconn are planning to invest 1.5 lakh crore in Gujarat for chip production. Semiconductor and semiconductor proxies, I think that's another big sector because nothing exists today. So my just point of view is that sectors which don't exist much at all today, but will exist in 2030, right? Those are like multi-decadal stories, and those will give like massive compounding. And I personally like micro caps because those are like really small companies. So let's say 100 crore company, if the market cap is 100 crore, that company can grow really big if it plays in these 9 or 10 sectors. So just shared my thoughts. Full agreement with Navroop ji, full agreement with Senik ji. I think we are in a strong bull market, and I expect the markets to do fairly well in the long run. Yeah, those are my thoughts, Rima.
Yeah, Rima, I'll just add to what Aditya said and just point out a fantastic data set which I came across, which I would like to highlight. In November, the FIIs was mostly, how do you track the smart money? How do you see sectoral switch happening? Which sectors are going to be the first ones to come out of a probable volatility or a recession in the next coming quarters? You see the money switching happen. See, when you see this kind of volatility, where the Nifty touches 18,600, comes down to 17,770, and then again goes back to 18,000, and now it is moving in a range. So basically, technically, the market is still bullish. That means it's almost been 1 month since we touched the new high, and it is still not ready to correct, which means there is distribution of money going on at this minute, when the accumulation distribution, as we call it. That means the sectoral switch is happening. Now, what are those sectoral switches in every correction? What is happening? So one data point which I came across now is FII. Now let's see. I know because FII cannot be the only data. There are the retail investors as well. But FII was the big time investments was in financial services in November. That is to 14,205 crores. But in December, they reduced their exposure to the financial services, and they extended the largest investment in FII is in the FMCG sector. Second largest is in the consumer sector, consumer services. The third is the realty sector. The fourth is now I'm talking about December, not November. Fourth is the financial services, then the capital goods, then metals and mining, and then the healthcare sector and construction sector. So you see a constant theme of, like about what I talked about BFSI, because the balance sheets are cleaned up. You see FMCG because they'll be the first ones to recover if inflation goes down. Then you see the consumer services because the aspiring middle class will wish to spend if it gets more money in hand. The government is going to go on public spending. So you see capital goods and construction. And obviously healthcare is going to be, because we still don't have that kind of penetration of healthcare in pharma in India. So that is going to grow. And where did the FIIs came the most reduce their positions? It was in media, it was in consumer durable, and it was in chemical stock and also in IT stocks. So what we see is where the valuations are correcting now, it will probably correct for another month or another quarter or two. So as I said, like systematically keep on adding for decadal stories. And Aditya said, recycling is one of the biggest things, and there are very few stocks of recycling in India. Very few. You can virtually count on your fingers how many stocks are there. So probably one would have to study those stocks and do your own analysis, research, and pick those jewels out now, because 10 years down the lane. Because if the auto sector grows, if the EV sector grows, a lot of batteries will need to be made, but they will need to be recycled as well. A lot of lithium and a lot. See, even if you install a windmill, I'm giving you a renewable sector now. The windmill at one point of time, those blades or those fans or the turbines will need to be replaced. They will need to be recycled. So where would you? So again, recycling is a very important thing which is going to, play upon that. That's my take. Thank you.
Okay, so Sam, hi. Go ahead.
Vibin has had his hand up. I just came up. Do you want him to go, or do you want me to go ahead?
No, no, he spoke before,
Okay.
so since you,
Okay.
yeah,
Cool.
I'll come to
Sure.
him.
Thank you. So I have a question to the panel. I don't know. Actually, I joined midway, so I'm not sure if you spoke about like the Mamaearth IPO. But my question is like kind of considering around the area of tech stocks. Although Mamaearth is not really a tech company, it's more like a D2C company, an e-commerce based company. So my question is, if you see, I mean, we're talking about sectors, we're talking about like multi-baggers. Looking at in the last 10, 15 years, what's happened in the US, and largely how the US market has panned out, a little more than that. You see, it's mainly tech companies, digital companies, which are leading the sectors there. Like many companies in the are actually product tech and product companies. And hello, can you hear me?
Yeah,
Okay.
we can hear you.
So in India now we have seen like a couple of IPOs, a few IPOs, Paytm, Zomato, not performing like these companies not performing so well after they have gone to IPO, and I kind of see like this disparity that probably if I have to recollect, like the only couple of companies which have done really well in the market are probably Infosys, TCS, and a couple of these services based companies which have been there and they have given good returns for the investors. But these companies like Zomato, Paytm, they were supposed to be the new crop. They were supposed to be the new final arrival of the Indian technology companies onto the scene, but they have not really panned out the way what's happened in the US, because all the major highly valued companies are like Apple, Google, Facebook, etc. What is the outlook like? How do we look at have these companies overplayed their hand and gone in at like really crazy valuations, or do we see tech kind of dominating the scene in India like in the US at some point, or will it always be some of these other much more robust sectors as you guys were discussing just now? So, if not, like why? What is going wrong for the Indian tech companies in India? Anyone?
That's a very broad
Yeah.
question, but interesting one. So, Narukji or Aditya, either of you can.
Yeah, I'll add and then probably Aditya
Hi,
can add.
hi,
Sam,
Navrupji.
over you.
Namaste.
Hi, yeah, namaste. See, Sam, like I give you an example. I normally do avoid taking the stock name, but I'll give you example of Nykaa. Now, Nykaa technically shows, valuation of 50,000 crores, right? And that's the market capital as well, the market valuation, and its price and its profit is only 5 crores. A company which was giving negative profits has just gone into minor profits, is having negligible cash flows, and is showing, has been, virtually valued by its venture capitalists or whoever they decided to draft the DRHP, right? For 50,000 crores, PE is 1200. I mean, seriously? Is this the crazy valuation? And then, look, apart from that, you also need to look at the management. See, the day the lock-in period of Nykaa was supposed to end, the most unethical practice, it's not illegal, but an unethical practice what the management did was, it declared bonus shares. And bonus shares and the bonus shares for the date was, the date on which the lock-in period was supposed to end, so that the stock rundown doesn't happen. A management's duty is not to manage stock price, but to give returns to the shareholder and and run a business. So when a management is busy in playing the stocks, playing the stock value, then you really don't feel like, like I don't even go. It's like a barging pole for me. I will never go near there. Now coming to Zomato. See, Zomato is is again the issue is higher valuations. Crazy. See, see, if you look at the global trend, I'm forgetting a statistic. There are global trend. The food delivery companies technically do not give that kind of returns. These kind of tech companies, the newest tech companies, there's only one company in America which is in positive. Globally, there are such 8 to 10 giants which exist like the same model as Zomato, but they do usually just give on a par neutral returns. Yet Zomato's acquisitions of Blinkit, they virtually screwed it. Like at a point of time, you took, debt-driven company not going for making Swiggy would rather make a perfect sense than going for Blinkit. But anyways, they went for the Blinkit. Now they are increasing their prices, and they're trying to streamline the operation. The CFOs have gone out. So there's a whole lot of mess which they have created. Can there be a turnaround? I really don't know how these newish tech companies can do. Paytm, I seriously, you like Mama Bazaar came out, like whatever the Mama Earth is there, sorry. Mama Earth came out. Look at the valuation. Crazy. Just look at the, I mean, what on earth, justify? See, if a company, let's say, like if you go to, like you go to fluorochemistry, all the fluorine companies, they deserve a high PI because they get involved into a niche chemical industry which is very difficult to master. So if you go for fluorine chemistry, I'll give you an example of stuff like marine fluorine. You go for GFL or you go to SRF, you'll find good high valuations. But those companies might also correct, but at the same time, they give because their EBITDA margin, their profitability is quite high in that. Similarly, if a company has a huge moat, like it has 8 molecules or 10 molecules, and it dominates that industry, it is the largest leader in the global supplies. See, even for that matter, let's look at Pidilite. Now, Pidilite is one of the leaders in adhesive. It is. These are just for examples and not an investment recommendation. I'm just giving for examples sake. I have not invested in this stock also. So, like for Pidilite, you will see Pidilite has been compounding profits regularly. It's a monopoly stock. It's virtually a quasi monopoly. It controls the adhesive market, and they are used in virtually every sphere of our daily life. What you consume. Now the problem is, of all the new age tech stocks, I only find Zomato is the only one which can turn around because like Indian can do everything, but they cannot stop consuming food, right? We are born foodies, right? So a service provider which gives us food is the only one which I think. My sense is that I still do not think I would rather wait and watch for the valuations of these newest tech companies to correct, for them to start delivering constant quarterly profits, maybe a quarter or two. And once their EBITDA margins stabilize, once their profitability come, which is why it is essential for everyone to look at, study the balance sheets regularly, quarterly announcements, and as well as the con calls, because there you find what is the management speaking about. How much debt do they have? Can they pare down their debt? So all these are questions which needs to be answered, which is why I would love to invest in these newer tech stocks, but I would still hold out and I would wait for the valuations to correct and for the profitability to start showing on balance sheets, and then only I would start putting my money bets on them. Aditya, go ahead, please.
Completely agree, Navroopji. I think completely agree. So I'll just share one point. I think the job of a for-profit company is to make profits and generate cash flows. I think that's the job of a for-profit company. For a not-profit company, not making profit is perfectly fine. For an NGO, not making profit is perfectly fine. But for the job of a for-profit company is to make profits, right? If you look at Paytm's numbers, Paytm made a loss of minus 2,700 crores on a trailing 12-month basis. The loss in 2020 was minus 2,800 crores. The loss in 2019 was minus 4,000 crores. Right now, the operating profit margins of Paytm are minus 58%. So basically, they sell what they buy for 2 rupees, right? They sell for 1 rupee. Now this is a great business because it's, let's say you start an apparel manufacturing business in which you purchase clothes for 200 rupees from let's say Zara and start selling it for 100 rupees in the market. The business will scale like crazy because obviously you are selling two rupee thing for 1 rupee, right? So the scale up happens like really crazy. But once you actually start trying to make profits, right, the customers won't come to you. The customers will go to someplace else. So I think right now none of the Indian tech companies have actually shown profits, and even the path to profitability will not be such that today there's a loss, tomorrow there's a profit. There's a journey, right? And the journey will be, it's a smooth journey. So let's say you have a minus 3,000 crore loss today. The loss goes to minus 2,000. Then next year loss goes to minus 1,000. Then next year loss goes to zero. Then next year you have a profit, right? So it's a smooth journey. It's not that this quarter you are lost, next quarter you're profit. So that journey itself is not visible in a lot of companies, right? A Paytm, especially Paytm, I can't see the journey right now. I would love to see the journey, but can't see the journey right now. Plus, it's facing stiff competition from PhonePe, Google Pay. In the interior of India, PhonePe, Google Pay are the leading players, right? So it's a tough market to actually make money in because of a lot of competition, right? Similarly, Nykaa, again, I think the valuations are crazy for a company with whatever, I think 10, 20 crores of profit. The valuations are crazy, right? It's like insane valuations. So again, unless you see profit growth, right, it is tough to actually take a bet on these companies. And I personally won't take a bet on these companies. Even in case of Nykaa, I think if you look at the numbers, right, the profit is on a trailing 12 months basis, maybe 47 crore. So 47 crore is the number right now, and the market cap is 43,000 crore, which takes a P to be 989. Now that's a very short profit, and the profit is fairly stable. If you look at the numbers also, right? They have a quarterly operating profit of 38 crores, 46 crores, 60 crores. So it's not even showing exponential growth. I think the whole premise of investing in this tech startup is that eventually the profit will show exponential growth. Right now, Nykaa, you are not seeing exponential growth. Paytm is making losses. Completely agree again on the Zomato point with Navroopji. I think Zomato can end up making money because food is something that Indians won't stop consuming. But even in case of Zomato, right? Uh, uh, right now those profits are not visible. Right now it is, but I think the uptrend is visible. I can see some uptrend in case of Zomato, but that's like the uptrend has to be faster in my view. It can't be that slow, right? So Zomato could make money, but at least right now it's not. And I think one problem with the ecosystem is that everyone is a lot of focus on funding and valuations. Entrepreneurs are building startups for valuations and funding. I think the real and I worked with Piyush Bansal. I think I was an online business head at Lenskart. Uh, the 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 foremost job of any company is not even to make profits, but to keep good customer service. If your customers are happy, I think that's like really really important. And you have to satisfy the unit economics, keeping the customers happy. So uh, I think the broad point was that uh, it is not it is not for valuation of funding. It is to solve customer pain points and have profitable unit economics. Very few people talk about bootstrapping in India, whereas bootstrapping is very very important. The best form of revenue, the best form of a startup is a revenue funded startup where you're actually running your startup from revenues, right? That's the best form of running a startup. So we have very few revenue funded startups in India, uh, which is like the best way to actually grow a business. Even if you talk to venture capitalists, right, they say revenue funded startup is the best startup, which we don't see a lot in India. So I think, but that is gradually changing. I think a lot of these, if you look at the micro cap segment, right, we have these hungry young entrepreneurs who are sort of who don't have the luxury of getting access to that much capital, and they are revenue funding their businesses. So I'm sure those, and that's why I personally bet on micro caps, because I think some of those hungry entrepreneurs will do really well in the future. So yeah, those are my thoughts on the tech startups. Yeah.
Yeah. To what Aditya said, I just sum it up. See, there'll be companies like Pidilite who have compounded profit growth and created value for shareholders, and are still at a PE valuation of 98. You will have Asian Paints, which has compounded profits for almost last 25, 40 years at the same 20-25% CAGR profit compounding for last decades, and still at the PE valuation of PE 72. Similarly, You'll have stocks in chemical industry which have grown 10 times or 12 times, especially in fluorochemistry, and yet have valuations of PE of 65, PE of 70, because these companies who have recurrent cash flow. See, there are certain metrics which you have to see way before investing. Valuation per se just cannot be the only thing which you look at it. You have to see what are the cash flows. More than what is the more than the cash flow, what, because the cash flow may not be here now, but it can arrive in it can jump up in a few quarters. You see what is the business model. Does the company have any kind of moat, or does it have any kind of monopoly over a chemical, over a molecule, over an API, over an industrial process? If it has a monopoly, what is the kind of competition in that market? Is it the only player? Is it the global leader? Is it the Indian leader? If any of these conditions are met, you can still buy into a company with a high PE and probably a little less of cash flow now, hoping that things would turn up. But again, as an educated investor, you must also be ready to keep a regular watch, because if the cash flows don't turn up, then the PE could correct, and you could have a, you might have to book a loss. So then there you might have to like virtually exit the company if you and that is where and a very what to say, as an eager investor, I do regular tracking of companies' quarterly results, what their latest announcements are. It's like a full-time job. Like, you cannot simply just invest your money and say and forget about it, unless of course you buy into the big conglomerates. That's my take.
So I'd like to make a quick plug-in at this point. I think I should have done this like an hour back. Is that the views are our own, personal experiences. Whatever I, Navroop ji, or Aditya, and who anybody else, whoever is speaking, these are our own views, and like, do your own due diligence before like investing or whatever. Don't like I'm not an expert, at least. So yeah, that's because we are not giving out any investment advice. So yeah, like, do your own study before you invest, and this is just an informational and interactional session, where we just discuss things. So that's that. And Navroopji, actually, I'm glad I stumbled upon you here on this space. I think I think this has been really interesting, and a lot of value add has been happening. So if you can give some time, probably we can schedule like this, sometime soon as well. So
Yeah, yeah, sure. Probably, I think let's wait for a couple of weeks, because the budget will be there, and then around the budget we can have another session. Because that will and because at the same time we'll also have the budget, the government policy, the government outlay, and also FOMC meeting coming on the same day. So Fed hike and budget and everything, so we can give a better perspective of how things would pan out, maybe like for next quarter or so. So, and the result season will also be done with almost by that time. We'll be in the middle of the result season as well. So a lot of things would unfold. I think that would be the best time to reconnect. It will be my pleasure to come back.
Yeah.
perfect. Let's do
Rima,
that.
can I
Take
add in a
care.
quick comment before you move on to next about
Yeah, yeah.
the
So, Sam, yeah, just 1 second. So, actually, we started at 8:30. So, we'll just, like, take one comments or go to people who have not spoken yet, and then probably, we can somewhat conclude in like 10 minutes or 15 minutes at max. So yeah, let's do that. So, Sugriv ji has not spoken yet. We will go to him, and Vibin wanted to say something else, so we'll go to him as well. Sam, yeah, please go ahead. Like, try to keep it short,
Yes,
and
yes.
let's just
So,
yeah.
yeah, thank you. I mean, yeah, it was great to hear Navroop Ji's and Aditya's points on the tech side. Personally, I feel one thing that should also be spoken about is a lack of innovation front on the Indian tech companies, because primarily what I was making a point about comparing it with the US companies is they are primarily companies which are innovation first. So they come up with, like, if you see Amazon, we incorrectly basically categorize it under as an e-commerce company, whereas it's mainly an tech infrastructure company, and their primary product is AWS, right? So if you when Zomato went for IPO, last year I was really optimistic at them dominating the Indian tech scene by building infrastructure components, by building the roadmap for the new startups like that are coming in. But unfortunately, some of these startups look like they are only playing the valuation game and not really the real tech game. What how to build the unique components which like Navruji was pointing out, right? So what are these moats? What you should be building and capturing the market. So hopefully, but one company I'm really hopeful about is which is also in the Zomato space is Swiggy, because I really like their what they do with their tech. So I'm hopeful that whenever they go for IPO, they'll have a really positive outlook. Yeah, thank you so much.
Sam, I think you should read if you subscribe to the Ken. There was this beautiful newsletter about the difference between Zomato and Swiggy. It was absolutely brilliant. They said Zomato is a consumer first company, while Swiggy is a logistics first company, right? So the way they solve the same problem is so different purely because of their core competencies. So I mean, it was a great read. Maybe I can share it with you.
Please, thank you so much. I'll also try to look it up, but thank you.
Okay, cool. So, Sugriv ji, did you want to share your thoughts at this point, or
Yes, Rima, Happy New
yeah,
Year to you. I
happy?
think it's the first space in the New Year by you.
Yes, yes, it is. It is.
I was listening to Navroop, Aditya, and the Sam now, the others also. And I also concur with Aditya. Indian story is great, but that stock market and country's growth story, they need not go together. But what one thing is sure for India, which I feel is that as long as that crude or petroleum prices remain under control, the even if the outlook for the world economy may not be very encouraging, the Indian story will remain encouraging, as can be as narrated by Aditya. And if you see that even the revenue side, government revenues are significantly increasing in that direct and indirect taxes both, and economic outlook. So the things are there. But like IPO frenzy, which Aditya was also saying about the some company, that valuations are done by the management, the government doesn't control them. So and glossy presentations are given without even having a fundamentals correct. So one should watch out before getting into it. As many has seen in the recent market trends, IPOs have failed miserably when even opening time. So be careful. As Reem also said, this is a discussion only, not an investment guide. So, but I feel that the Indian story will continue as long as there's a market. We have our own market besides the, and things are going to be better after the COVID is over almost. I hope that what is happening in China won't affect us, because most of us are vaccinated twice, or people have taken additional dosage also. So all the best. As they say, look before you leap. So examine the fundamentals before you buy any long-term investment. So all the best. Thank you, Rima, for giving me an opportunity.
Thank you so much, Sugriji, for joining in. And yes, very nicely summed up as well. So thank you for being here. Okay, have I missed anybody? Manojji, welcome. And there are a lot more requests, but I don't think we'll be able to take all of them tonight since we've been doing this for quite a few hours already. So we'll just, go to Manojji once, and then probably Navroopji and Aditya we can, like conclude. So over to you.
Yeah, yeah. Happy New Year, Rima, Navroz, and everybody. Happy New Year, Aditya. Okay. So as our topic is related to new sectors, so I think the new sectors for Indian economy will be the EV, solar, waste management, okay, anything related to manufacturing, okay, because India is a country which will be replacing China in the manufacturing. The lots of manufacturing industries are coming. So China substitute, India is looking at China substitute, okay, and as we are on the urge of moving from 3 trillion economy to 5 trillion economy in next 3 to 5 years, and then further to 20 trillion economy in by 2035 something. So there is a huge opportunity for the investor for the long term, okay, where the new age promoters, which are the stocks which are coming into a SME sector, and if the valuations are good, and that there is a demand for the product, and there is a expansion happening, and the preferential allotment happening, change in promoter happening, those are the sector one should look at, to look at those stocks to make a good money in the next 5 to 7 years, because India will be at a structure bull market. Currently, it is going on, and I think if one will invest with carefully with proper study and research, I think big money will be created in next 6 to 7 years.
Yes, perfect. If we only develop, those sectors, like you said, EV and, the chip sectors as well. I mean, if we can, I personally believe that if we can, like grab this opportunity, the gap that is creating, and if we
Yeah,
really act on it fast, then there's a big opportunity for us to grab.
correct.
Otherwise, it'll be a very lost opportunity for India as a
Yeah,
whole.
yeah,
So yeah, I mean, I don't know what's happening at the ground level, but there's just so much gap in the market right now, and if we move fast, probably we can, like grab a lot of the international markets that is there. With that, I'll go to Navroop ji and then Aditya, and then probably we'll conclude for tonight actually. So over to you, Navroop ji.
Thank you, Rima, for it. I'll only say, I'll end with this. So many people are there out spreading negativity. The moment market falls from 8,100 to 17,900, immediately you will see a space, and immediately you see giving targets of 12,000, 7,000, 8,000. I mean, for what? As Sainiks has said, India's Nifty PE is still 22. The same time, at the same level, last year to 2021, the PE was 28. The market is still grossly undervalued. To answer those critics who spread bearishness and who spread a kind of negativity or negative sentiment, who would love to short the market, but that's their hobby, they can do it. I would say, I will just give you a hint. There's a very famous infrastructure giant of India, right? Now that stock was trailing at 1400. I won't name the stock. Huh? That stock was trailing at 1400, and today that stock is around 2000. It's gone up nearly 50, around more than 50%, right? Even after 1,000 fall in Nifty, it only corrected by 100 points, and it had recovered 50% of that gains, that loss once again. It will trace back. Similarly, there's one of the largest FMCG companies in India, which is a century-old company, has gained virtually 25 to 30% from June to till the October high last year. So people, and those companies, despite those corrections which have happened, those big giants have still not, the large caps have still not lost their value. They still retain with minor hits. So even if you even if you take and then there was like I gave like I don't want to give an example, but again adhesive and adhesive stock was trading at 2100. Now it is at 2700, and it might be minor correction here or there, in a range bound manner. Obviously, that is not a recommendation, but I'm just telling you that the fact that the market retained the bullishness for almost 1 month, it is not willing to easily let go the 18,000 level, and there's a lot of retail investment, lot of SIP, and the amount of the folio the folio investment which have been made, as in the amount of DMAT account which have opened up in last. There was some data I read somewhere else. I don't recollect. So there's a lot of people who are really interested who want to invest. To the newbie investor, I would say do not be scared, but at the same time, don't overpay for those stocks. Value only when you find certain criteria are fit. Please make an effort to read the company profiles, read the promoter pedigree, read the cash flows, read the ROCE, ROE, the profitability, read the conference call after every quarterly results, right? Read the market news, scan through the fundamentals, and also find out whether it's the only company or there are competitors. If there are competitors, and then what is the kind of monopoly it has? Is it the Indian leader or the market leader, duopoly or oligopoly? So you will have to find, you'll have to, find out the diamonds in the haystack. And that's a very difficult job. Investing is not a very easy job to a newbie investor. So I would say, it's a tedious job, but please remain bullish on the Indian story, because Indian story is yet to unfold. There are sectors which are, if you go back in the space which I have recorded, I won't repeat for the sake, which will give you decadal returns. It's only that you pick up right stock at right valuation and right entry, and make an entry at the right time. And for that, I would say, like I have, I like, people have coined the term BTFD. Whenever a market corrects, I don't want to give the full term of it. I have coined a term of BTIS, buying the Indian story. Keep buying on the Indian story. Don't go into the bearish kind of nonsense. Wherever you see a good fall or a good correction, add systematically. Add systematically where you have conviction, where you have belief, you believe that company can deliver, you believe that company has good profitability, it has given good ROE and ROCE returns for last couple of years, and you think there's a runway ahead to compound your value and make good profits. That's all I've got to say. And with that, I'll hand over to the other speaker.
Uh, Aditya, before you go ahead, just a second. Navrupji, thank you for your insights. And really, I'm so glad that, you joined with us tonight. I think this was really productive and, like to the point. It's not one of those sessions where we keep talking and we keep going and we lose a sense of time. But I think, all of us here tonight have been very precise and to the point. So I personally enjoyed it a lot. So thank you again. And let's again plan something after the, budget sessions. Hopefully, we'll keep in touch. And also, a quick plug-in is that if this was productive to you, you can follow us or whoever you like, so that when we do this next, you can see it on our tweets that we are planning another space. I personally plan to do more of international markets as well and on geopolitics as well. So if all those interests you, do stay connected. We'll do more on those. I plan to do more on those. And another shameless personal plugin is that if you want, you can follow me on Instagram. Just trying to, create a community there. So, okay, with that, Aditya, over to you.
Sure, Emma. Thanks. First of all, thanks, Emma, for having me here. And thanks, Navroopji. I think it's always a pleasure listening to you. I think I again fully agree with Navroopji. I'll just make a couple of points. I think we should all remember what is market, right? What is stock market? In my head, stock market is a group of highly intelligent people taking the right decisions. that highly intelligent group of people can go wrong in the short run, but they will always be right in the long run. So that is why you see temporary volatility, but those that highly intelligent group of people will always reach to the right decision. I think India is in a structural bull run. We are focusing on all the right areas. The PLI schemes are very well designed, focused on all the important areas which the economy needs. We are focused on cutting our import bills. We are focused on making ourselves self-reliant. So Atmanirbhar Bharat is a great vision to have. And definitely India is in a structural bull run. We will continue to grow. In terms of even though FI is selling, right, but FI selling means the net, there's net FI selling. Smart money, smart FI money is still coming in India, and they know that India is in a structural bull run, right? So I completely agree with Navroop and Senekji on the fact that India is in a bull run. I think the third major player is retail investor, and the power of retail investor is rising in the market. And I've started a company myself, which is called Sovereign, and our objective is to make Indians financially independent. I think my personal vision is that every Indian participates in the Indian market. Right now, Indian retail participation in stock market is only 4 to 5%, whereas the same number in India is 50, same number in US and China is 50%. So there's a very large headroom to grow from 4 to 5% to 50%, which is a vision of my company and myself. I personally want to make sure that every Indian invests in the market. So I think once that money comes in, right, the liquidity boost itself will be a big factor. This earnings are growing because India is in a structural bull run, but the liquidity boost will come in as the retail investor starts investing and pumping in money in the market. So both earnings will grow and liquidity will grow. So I think that is another factor that we need to consider. Small town people in small towns in India, they definitely want to invest. Everyone is eager to learn. So retail investor will play a very, very, very big role in the market. Lastly, I wanted to I just wanted to share one fact from my side. I was discussing with my house help that how and my house help needed money for her children's education in the next 3 or 4 years. So I was discussing with her, and I realized that stock market is a way to sort of make to actually fund her children's education. So what I did was I created a demat account for her, and today my house help, she owns the stock which I like the most, and her Diwali bonus was actually in the form of that stock only. So we didn't give her cash bonus; we actually gave her stock bonus in Diwali.
Aditya, sorry to
Yeah,
interject 1 second.
yeah,
What if
yeah.
no, this is this is really encouraging. I mean, yeah, a good way, but what if it went the other way? I mean, what if,
It's still my money. It's still my. It was her
yeah, yeah,
bonus, right?
yeah.
So it was
Ah,
not her
okay,
money.
okay. So
It was her
you
bonus.
invested your money for her,
Yeah, yeah.
or
I
for?
invested my money for her, which was her Diwali
Oh,
bonus.
that's amazing.
Yeah, and we gave her 10,000. That I really love the stock. I think that stock will be maybe 100x in the next 4 5 years. So that 10,000 will be 10 lakh for her in maybe 4 5 years. At least that is what I foresee. So I didn't really give her 10,000. I actually gave her 10 lakh if actually everything goes as per plan, which will actually fund her children's education. So I really encourage everyone to sort of any bonuses you give to your employees, right? If they are willing, I think that could be like stock bonuses. And I think as India prospers, right, uh, I think the underprivileged sections of the society, I really want my personal vision that they sort of capture that wealth as well. So that is my personal thought that in case you find this idea good, please do that. I think this could be like life changing for someone if things go well, right? And anyway, it was a bonus. It was my money which I invested for her. So that way they don't suffer any risk as well. So I think that is what I wanted to say. Yeah, that's about it from my side.
Perfect. So, I think we have a really great session tonight. Money Garg is unavailable for a while, but he's always been with me, whenever I do this session. So that's a real big help. And anyway, thank you all for joining in.
Thank you so
Um,
much.
yes, thank you guys as well, for spending your valuable time here for all of us, new investors and people who are still learning. So thank you for giving your time here, and yeah, like let's stay in touch and let's plan more in the coming days. So with that, I'll end for tonight. Thank you all for joining. Bye bye, good night.
Thank you.
Thank you. Thanks everyone.
Thank you. Good night, everyone.
Good night. Good
Good
night.
night.
Good night.